You've seen them, right? You're scrolling online and bam, there it is. Another ad for a trading bot with this perfect, beautiful profit curve just rocketing straight up. They promise you can just press a button and make money while you sleep. It looks like the easiest money you'll ever make.
But come on, you have to ask yourself if it's really that simple. If these things are so perfect, why isn't everybody a millionaire by now? Well, it turns out there's a whole lot of stuff they're hiding behind that pretty chart. And today, we're going to pull back the curtain and expose the dirty secrets they really don't want you to know.
So our investigation kicks off with clue number 1. It's a really simple but incredibly powerful visual trick, and it's all about what they show you and, more importantly, what they conveniently leave out.
Okay, so here's the entire trick in a nutshell. It all comes down to two words: balance versus equity. That beautiful line on the left, that's your balance. They love showing you this one because it only counts trades that have been closed for a profit. Of course it's going to go up, but the curve on the right, that's the equity. That's the one they hide. It shows you the real-time value of the account, including all the open trades, which are often these massive, terrifying losing positions. So while the balance looks like a dream, the equity reveals the nightmare, those huge dips that can literally blow up your entire account in a blink.
And make no mistake, this is not some accident. As our source material makes crystal clear, this is 100% intentional. They are actively choosing to sell you the fantasy while burying the cold, hard reality of the risk you're about to take.
All right, on to our second clue. This is where we see that the deception goes way, way beyond just one doctored chart. It's actually a full-blown numbers game they're playing.
And the name of that game is survivorship bias. It's a classic statistical trap. You see, you're only being shown the winners, the survivors. You're not seeing all the ones that failed, that crashed and burned along the way. And when you only look at the success stories, you get a completely warped idea of how good the system actually is.
So how do they actually pull this off? Well, it's not about running one bot. Imagine a seller secretly launching, say, 50 different small accounts at the same time, all running the bot with slightly different settings. And here's the playbook. First, they launch all those accounts and just wait. They let them run for 6 months, maybe a year. And inevitably, most of them are going to blow up. So what do? They just quietly delete or hide all the failed accounts. What's left? You're left with a couple of lucky survivors. And those are the ones they plaster all over their website, claiming it's a 100% successful strategy. It's a complete illusion. So we've seen how they hide the bad results, but what is it about the strategy itself that makes it so dangerous in the first place? Let's pop the hood and look at the engine that drives this thing. At the heart of it all is this one incredibly seductive promise. This bot will never close a trade at a loss. I mean, think about it. If you've ever traded, you know how much a losing trade stings. So the idea of eliminating that pain forever, that sounds like the Holy Grail. And that's the psychological hook they use to get you. But this is where that dream becomes a complete nightmare. Here's how it works. The bot opens a small trade, let's say, and the market immediately goes against it. Now, instead of taking a small, manageable loss, it does something crazy. It opens a second trade, but for double the size. The market keeps going against it, no problem, it just opens a third trade, doubling the size again. The risk isn't just adding up, it's growing exponentially. You end up with this monstrously huge open position until finally, one last move against you, you get a margin call, and poof, the entire account vanishes. And here's the incredible paradox, the punchline to the whole joke. The one feature they sell you as the ultimate safety net, the promise to never lose, is the very thing that guarantees you will eventually lose everything. It's not a matter of if it will blow up, it's just a matter of when. Okay, after hearing all that, you're probably thinking this strategy is just pure toxic garbage. But what's really interesting is that our source material actually asks a pretty compelling question. Is there a way to manage this risk? Can this beast actually be tamed? So let's look at two totally different ways to do this. On the left, you've got the seller's way. You throw all your money in one account, you use no safety net, and you just sit there and wait for the inevitable explosion. But look at the right. A safer approach involves two huge changes. First, you diversify your risk across a bunch of smaller accounts. And second, and this is the big one, you use a hard stop loss. You decide ahead of time, I'm not willing to lose more than this amount. And that right there is the whole ballgame. A hard stop loss is the circuit breaker.
It's what turns a random, unpredictable catastrophe into a planned, controlled, and manageable loss. It is the only real defense you have against a total account wipeout. So, now that we've peeled back all these layers of deceptive marketing and dangerous mechanics, what have we learned? What's the final verdict on these so-called perfect profit machines?
Well, we've really uncovered 3 big secrets. First, there's the 2-curve trick, where they show you that fake balance curve to hide the real risk. Second, we exposed the survivor's game, how they create a fake history of success by burying all the failures. And finally, we diffused the Martingale trap, showing how that never lose promise is actually just a ticking time bomb waiting to go off. So the next time you're scrolling and you see one of those perfect profit curves, you're not going to be fooled. You'll know exactly what's hiding in the shadows. And more importantly, you'll know exactly what questions to ask.